welcome everybody. Welcome to the latest CTO Craft Bytes. Today, we're going to be looking at preparing an exit. So technical due diligence for technology companies, okay? So if this is your first time at CTO Craft Bytes, let me tell you a bit more about this group. CTO Craft is a mentoring and coaching community for technology leaders around the world, focusing on supporting technologists in their leadership growth. Community members are over 7,000, and CTO Craft provides them with one-to-one coaching, mentoring groups, a curated Slack community, and events like this one. Firstly, a huge thanks to our headline partner, AWS, for helping make these Bytes events possible. I'm going to be hosting for you today. My name is Ezechi Bridden, or Ez, as most people know me. I'm a founding member, principal investor, and CTO in residence for ImpactX Capital. And in the good old days, I was a technologist, I was a co-founder, I was a CTO, and I've had to go through my own technology due diligence, most notably by Goldman Sachs, which was a very interesting experience. But today, we're joined by Federico Fregosi. Federico, why don't you kick us off with a quick introduction to yourself?
Of course. It's good to meet everyone. My name is Federico. I work at Contino as VP of Engineering. Contino is a global DevOps and cloud end-to-end transformation company. I've been with Contino for the past 3 years. I'm responsible for our technical strategy, our engineering resources, working with large clients, helping them on a day-to-day basis. Before Contino, I've always been in an engineering management role at Curve before and Funambule earlier. It's good to be here.
Fantastic. Fantastic. So look, it's great to have you with us. And for everyone else joining us today, there is an Ask a Question button below the video at the bottom of your screen. Please feel free to ask questions. And what I'm going to do is I'm going to try to feed those questions in as we go along, rather than just have a 15 minutes at the end ask questions. So please do ask your questions as we go along, as you see interesting bits and pieces, and then I'll feed them over to Fed as we're doing this. Okay, so let's get going. Let's talk about preparing an exit, technical due diligence for tech companies. Now, Federico, over to you. I believe you have a presentation which you're going to give to us, and then we're going to have a bit of a chat afterwards about some aspects of that. So over to you, Fed.
That's right. So thank you very much. So we're going to start with a super small presentation. It won't take too long, so I won't bother anybody with this. But I wanted to share something because I think that, especially in this context, I think is worthwhile, covering a bit of the background to this. So first of all, just an introduction about myself. So we're talking about, and what we're talking about? We're talking about technical due diligence for tech companies. It's a bit of a mouthful, but let's see what it means together. So every time there's a transaction happening, companies are bought, acquired, and sold all the time. So this happens all the times. And the need to include IT during the M&A process is greater than ever. It's getting really, really big, especially these years. These are the years where we're seeing an increase, a record in M&A growth, and we're seeing a lot of challenges happening at the same time because most of the buyers, most of the companies that buy other companies are typically performing less than one deal a year. So what does it mean? It means that they're not as experienced as as you may see in VC or PE firms. And at the same time, we're seeing this explosion in the valuation of the companies, unicorns, decacorns as well even. And at the same time, we're seeing the M&A success rate being stable. So we're seeing on one hand, increasing growth, increasing deal size, and we're seeing a lot of activity in the space. This is why companies are performing way, way more due diligence. So one thing I wanted to get clear and is remove a bit of the jargon that is usually used in this context. I will try to use as few jargon as possible. There's some things. So when a transaction takes place, you have buy side and sell side. Buy side is the part that acquires a company. Sell side is the part that is selling a company. Selling should not be seen as a passive action. Selling is an active action. So you may go to market and say, hey, I want to be bought. I want to be bought out. There is a bit of jargon as well. So the buy side, the acquirer, is also called the buyer sometimes. And the sell side is called the seller, obviously, but it's also the target company. The target company is a target that an acquirer wants to acquire. So because you have all this jargon, in a lot of cases, what happens is you end up doing a lot of checks. So you're acquiring a small company, and when you're acquiring a smaller company or a larger company, you're acquiring something. You want to make sure that the company is worth what you're thinking is worth. You want to make sure that the company is equipped to deliver on the promises you're made. And so you're typically doing yourself or asking a number of third parties to perform an assessment of the technical company. So you're doing due diligence. What would happen? Super simple example. You can have a VC company thinking of investing in or acquiring target, and they want to perform some checks before investing because they want to make sure that their investment will be fruitful. And what they do, they engage third parties to help them with this. Sometimes VC will also have internal functions. One thing to keep in mind, due diligence is a very big process. So you have a lot of different types. You have commercial due diligence. So you want to make sure that the company you're talking about, you're working with, this company is in the right market, is doing the right thing, as quality of earnings as you're expecting them to be. So there's a commercial side, a strategic side. There is a legal due diligence, accounting due diligence. There's a number of these things. And then there's technical due diligence. This is what we do as a company. I continue to my expertise is also in. So technical due diligence is the technical side of this. So making sure that typically a tech company, a software company, is operating in the right way. But let's see what the right way means, because I've been in the sell side as well. So I was working in a company that went through due diligence and funding rounds multiple times. And there's always this disconnection. So what is the goal of technical due diligence? A lot of people think that the goal of technical due diligence is to assessing the technical status of the company. This is a common misconception. We're here to assess the technical status of the company. This is just not true. This is how we're doing it. But the goal is a very different one. So we're validating the investment thesis. It's a very different thing. So we're not making sure that you're doing CI/CD, you're doing engineering the right way. We want to make sure is that the investment thesis that the buyer has can be validated through technology. So you're saying, super simple example, you're saying in 3 years, we're going to scale 10 times, and our systems are scalable, and we don't have a problem with this. And we are going to assess that if your systems are scalable, if the investment that the acquirer makes is scalable as well. So it is suited for the scaling. So this is a key point. This is not making sure that you're doing technology right. This is to make sure that the investment thesis is validated. So depending on whether it's a private or a growth equity deal or corporate M&A, there are dozens of investment strategies. Okay, so sometimes they want to acquire a strategic company, a company in a strategic way, so doing a strategic acquisition. So you're investing in the company. In other cases, you just want to strip the assets. There are sometimes you just want to do a acqui-hire, in which you're just getting the talent because maybe there are 3 or 4 people that are really talented in the company. All of this is can happen, and knowing the investment thesis enables then technical due diligence. So this is really the goal. Okay, so the key thing is the following: due diligence, as I said, is typically performed buy side. Okay, so and we'll see as well the process in a moment, but you can clearly imagine that there is very fewer things that you can do that will impact the valuation of the company more. So if during due diligence we discover that there are issues of some sort, these issues will have an impact on the valuation of the company. It's very clear these issues may be, may need to be fixed before the company can be sold. Very common issue. Maybe this target does not have all the Office licenses, all the Microsoft licenses that it should have. So these type of issues need to be addressed before. Maybe this target company is using open source in the wrong way. We'll see what it means as well. This needs to be fixed with that. So continuing with all of this, we want to make sure that, as I said, we can support investment thesis. So let's look at the process together. How technical due diligence work. This is not the entire DD process that is way longer. We're just going to focus on the technical due diligence. So technical due diligence, buy side, super, super important. What does it mean? It means that at some point, buyer will come, either do it internally themselves or come into a third party as we are, and they're going to have some meetings, assessment, deciding together what the strategy will be of the acquisition, letting us know. Then this starts an introduction in which we say, okay, so third party, buy side, sell side, get together in a room. Hey, this is us. Introduction, how you doing? Kickoff call, in which we say, okay, so as the official start of a due diligence process, where the requirements are defined, the steps are shared and everything. There is a documentation screening step in which a lot of documentation is usually requested. Can you share with us architectural diagrams, org chart? Can you share with us the scaling patterns, the issues that you have, your Jira backlog sometimes, depending. Then there is a in-person review, on-site, remote, now these days, depends. Follow-up after that, which is we have some doubts on some specific things. Can you help us understanding? During these follow-ups is when we bring in also sometimes specialists on our side or specialists even on the buyer side. So if you're a startup, you typically will involve your CTOs, your senior management in certain most meetings, and then you will involve that database expert, that developer that knows how small bits work in the following up steps. At the end, there's a report. It's a structured document that says, based on all of this, we think that these are the issues that this company has, maybe not, but these are the issues. And based on the issues, sometimes what we do as well is we say, this is how much it would cost to fix them. This how much, orders of magnitude roughly, helps inform evaluations as well. And then at the end, this continues towards DPA, which is the definite purchase agreement, the final steps in the process. So tech due diligence, buy side. Why? So we want to understand the investment thesis. We want to make sure that the acquiring company avoids expensive mistakes. We want to have clear outcomes in the sense of saying, these are the issues we've identified, and understand strengths and weaknesses. As I said, because most buyers are buyers that buy once, for parts of their due diligence will result to third parties and consultancies for a number of reasons. Sometimes because they want to have, be somebody really responsive that can help them with the right level of knowledge. Sometimes because they don't have data available, because they don't know what is good supposed to look like, how fast should a company operate, and all of this. But also, and mostly, third parties are involved as well to mitigate IP concerns. So if you're thinking about this, a buyer of a company, not all the time is a VC or a PE firm. Sometimes it's a larger company that operates in the same space of the small startup. And not all the times the process ends up successfully. So buyers want to protect themselves from IP theft or from competition clauses as well, involving a reputable third party that then performs due diligence for them, because performing technical due diligence means exploring the inner details of how a company works. So there's a lot of IP that happens a lot of IP exploring that happens in there. So to protect themselves, those buyers will involve third parties that can help them with that. In the same way, those third parties typically can help with remediation in a short period of time, maybe before the closing or after the closing of the process. So buy-side due diligence. At the same time, this is 2021, okay? So a lot of startups are thinking about an exit event. A lot of startups are preparing for a sale event, are going through a sale. So what happens? What happens is that we've seen this and has started engaging consultants in the same way which engaging the buy side is. So before a technical due diligence, you start preparing for it. Preparing yourself for a good technical due diligence as a seller, as a startup, means balancing your strong points with your weak points. It's not about hiding anything. It's about creating the right narrative and typically identifying some things before you get there. It's also very important to help your leadership team that maybe has not done this that much, and maybe has done it once, it has never done it before. So it's a way for a startup, the sell side that we're talking about today, The sell side is a way for startups to, have a head start on documentation, being really quickly and understanding, preparing documentation beforehand. DD is a very documentation-heavy process. It's a way for also to show commitment to buyers. Also, depending on the process, sometimes startups would go to market and say, I'm available to be bought, and attach some form of vendor report for this. It's a way to explore risk early, because maybe you don't really know what are the most common problems that we find. And so by doing this, we help uncover issues, resolve them before, you go to market, or before you put a plan, at least, right? And also because, as I said before, practice makes perfect. A lot of times, your leadership team is not really experienced on this. So different company stages, like for this audience, especially for startups, different company stages, I'm sure you're all familiar with seed, Series A, Series B, Series C. Now, what do they mean, right? So at technical due diligence, you will see that there are different areas of focus in this sense. So if you're a seed fund, you're looking at discovery, you're looking at product. If you're a Series A, you're looking at how is the product being built. Series B, Series C, are they actually going to be able to scale? Series D, maintenance. So just examples here. I'm sure that some of the acquisitions that will happen in the fintech space in the next few years, all these very big companies that went through a number of funding rounds, if they get acquired, most of their due diligence will happen on their maintenance side, their compliance side as well. So one of the things I wanted to say as well, due diligence can become really burdensome and really heavy. Of all the things that happen, one thing to keep in mind is the fact that not all the questions are asked all the times. So if you're seeking investments from a VC fund, the VC fund will be very open to accepting risk. So there's not much risk avoidance. They're happy to go and take some risk. So their due diligence process will be shorter, typically. But if you're getting a PE firm instead of making an investment, they will be way more risk adverse, and they will be way more conscious of what they're doing. So, which means it will take way longer, the DD process. Also, the process can take days, weeks, sometimes even a lot longer weeks, because doubts that get uncovered can make it way, way longer as well. This is why, to be honest, doing sell side, preparing for due diligence before due diligence starts is an important activity, because you'll reduce the burden on your company.
Federico, a few people in the audience seem to be having some trouble with the video. They might have had to refresh a couple of times. I think a few people seem to be okay now, but I know Sachin, for example, missed the sell slide completely. Do you mind just doing a very quick recap on the sell side for Sachin, and then we'll come back to this point. Okay, you've got plenty of time, so don't worry about that.
Okay, so just gonna go back on sell side. Just quickly going back here. So this slide, I think, is the perfect one. Hope there's no issue. So technical due diligence, sell side. It's a process, as we said. Companies at some point need to have decide to acquire other companies. In acquiring other companies, need to have a validation of the value of the assets, need to have a validation of their investment thesis. Because this validation can be complex and take a long time, they would engage a third party to say, hey, can you please check that our investment thesis validates against the technology of this company? If our investment thesis is in 2 years, this company will scale 10x, do they have a technology that can scale 10x? This is what we assess. We don't assess is technology doing engineering, company doing engineering well or not. And then there's a process with this in which you're engaging a third party. This third party helps with reducing the issues, avoiding mistakes for the acquirer, checking strengths and weaknesses of a company, making sure that the system scales, and as I said at the end, providing clear outcomes, including a report. The report will have guidance on where the company is and how much it would cost roughly to fix some of the issues, or what are the remediation costs for all this. This is a bit, this is kind of like high level. The sell side, that was the buy side. The sell side instead is a different process. Is companies, startups that want to prepare for technical due diligence what do? They say, okay, because it's a demanding exercise, because my team has not done it that often, because it takes a long time, because I want to prepare for it, because I want to have documentation ready, I want to show commitment to buyers. What do? I prepare 3-6 months before an exit event, engaging a third party that will perform very similar level of due diligence and help me with some report that will say at the end, you can fix these 5 things, but also this is the existing status of your company and will help also your leadership team getting used to the question and helping on this. Companies at different stages will perform due diligence in different ways. More maintenance, compliance focused on Series D+, more product focused on Series A, and scaling focused on Series B, Series C. Hope this will able to kind of like do a bit of a recap. In the end, a couple of things. So vendor due diligence. We're talking sell side. We're talking startup engaging a third party. Third party says, here is a report. This matches your strategy. So how you want to be bought? If you want, or do you want to sell the entire company? You want to see a small investment, then depending on the strategy, the report gets tuned a bit. Can be seller or buyer focused as well. So either helping the seller focusing on the remediation, so these are your issues, or helping, saying this is a company in this state, and this can become an attachment to something you can go to your investment banker as well. This is a way for identify key weaknesses as well. So here we are. Couple of things. So in this, so before, and I'm about to finish the slides as well, so there are questions, we'll take them. But 2 things are important in defining due diligence. The first one is that strategy is super important. So understanding exactly what the strategy of the acquirer is for the buyer, for the seller, is super important, because it would mean that tech due diligence and all the other forms of due diligence are informed as well. And also, in the end, the other piece of advice that we see happening in most cases, but not all the times, is using a data room, which is just a SaaS, is a website that is used to exchange documentation and making sure that all the tasks are done up to standard and everything is done correctly. It's just a website where everybody's sharing data. The website is really useful because you need to imagine that technical due diligence for a large company that is sold for hundreds of millions can become really, really heavy and can get really data heavy. So having this website in place really helps. But now, what is due diligence about? And this is kind of like high level view. We can take questions on if you want the specifics of all of this. I have slides for that as well. But let's see. So from my perspective, from my experience, from what we see in the industry, there are 6 pillars of due diligence that apply both on sell and buy side. Number 1, technical strategy, roadmap, super important. So does the company have a technical strategy? What does it look like? What is the roadmap? Did they think about something? They choose something over something else? They choose a very uncommon tech stack. They chose a very common tech stack. If they chose an uncommon tech stack, then it means it will be a challenge at recruitment time. Then it means that it's very hard to keep up to date. This is a typical challenge, right? So technology strategy and infrastructure, if you want about this, is very, very important. All the times get assessed. Business continuity plans, type of infrastructure that you're using. Are you going on-prem? Are you using cloud? If you're using cloud, as everybody is, how are you using cloud? What type of programs, softwares are you using? What type of processor are you using? What type of architecture have you chosen? Will your architecture scale to what everybody's expecting it to scale? Maybe there's no need for it, but it's there. And then product. So product is super important, but in what we do is that there are effectively 2 sides of product. There is a commercial due diligence side that will look at your product from a commercial perspective. How does it stay in the market? What are the competitors? We'll do SWOT analysis, market analysis, customer analysis as well, all of this. From the technical due diligence side, instead, what we want to assess is how you're building your product. What are your processes around this? What are your workflows around this? Are you making sure are you taking customer requests in the right way? Do you have a QA process done correctly? Do you have Jira, using CI/CD? How are you building your product against what the average in the industry is, clearly? So nobody's perfect in this, right? People is then another side of tech DD. So people is sometimes is more important than other cases, depending on the investment strategy. If you're acquiring a company for its expertise and its people, really important, getting an org chart, who is responsible for what are the key contributors? Is there a person that has ownership for 80% of the code and all the others only have 20%? How does it work? Do we have retention bonuses in place? Is the compensation correct? And can we infer anything from all of this? Do we have a succession plan in place? What are the talent strategies as well? Depends sometimes, depending on this. Process and workflows is a very heavy part of this. And in the end, IT and governance, which become really important as well. So IT and governance means what are the systems you're using to work? Laptops do we have? What are you using for that? Governance, what type of data are you using? How are you using data? Do you have any compliance framework you have to follow? Are you regulated? Are you following any security concern about this? And also, in terms of compliance, and if you want, there's also the open source angle. So compliance is a very big thing. In all of this, we also make sure that when it comes down to source code, you're using source code in the right way. So you have version control and everything in place, but most people do anyway. But also, are you keeping it up to date? So is there any old library? How old is the source code? How is source code being deployed? And one of the most common problems, which is open source. So how are you using open source? A lot of times people import libraries from the open source from GitHub. Those libraries have licenses that have implications in the way in which they're used, for which you may be able or not be able to use those licenses from commercial purposes. So it's super important as well. So at the end, oops, my light has just gone off. I hope it will come back in a moment, but there it is. So my key takeaway for this is that just one thing to take away with you is sell side, startups. You know that when you're doing tech DD, preparation is a key predictor of success, for sure. Due diligence is a demanding, intensive process that will take a long time. Due diligence as a whole, 6 months or a year. Tech due diligence is a portion of that, weeks, typically, sometimes less, but typically weeks. Will put a lot of effort on, require a lot of effort from your teams. And given also data-driven decisions making is a best practice, my recommendation is think about due diligence early in the process in a way that you prepare the data, you have the company ready. This will clearly have an impact, like a financial clear impact on the valuation of the company. We've seen cases in which companies that come up with a lot of, come really prepared, they will score a lot of points because everything is ready. They've done their jobs, they've done their homework, they can prepare the problem. Companies that instead of not ready, they just miss out. They miss out because the problem that I see that, people are very eager to say, I know or I don't know. As engineers, we're binary about this. Whether instead, creating a narrative around this, it's always much better. So just saying, my database, I'm not sure if it'll really scale to 5x, 10x our users, my database. But here is our remediation plan. Here is what we're going to do in the next 6 months. So creating a narrative around all your problems, limitations, or what you're doing right now, and always be compared against everybody. Last point I want to make on my side is, I don't want to make it too heavy on you. So I'm sure that if you went through DD processes with VC firms or companies that have a high risk appetite, those will not be as burdensome as they would be if you went through a DD process from a strategic buyer, if you're going to DD process with a PE firm, where instead will be way longer the process. VC are much easier usually sometimes, but not all the time. Depends also on the size of the investment, I guess. Okay, so these were my slides. I'm happy to take questions and to have a bit of a chat on this, I think. I can also share some other things if interested.
Fantastic. That was an absolutely brilliant presentation, Fed. Could we take the slides down now, bring you back up on screen? I think that'd be brilliant.
Yeah. There you
go. Perfect. So we got a few questions, but firstly, I just want to say that was awesome. I've been on the buy side and I've been on the sell side. So sell side during my time as CTO at Neighbor, and buy side as an investor through Impact X. Although I've never acquired a company, I have certainly invested in them. So brought back a lot of memories, some of that actually, because it can be quite a scary process going through tech DD for the first time, especially with a big investor or an acquirer. But you covered so much amazing detail within that. A lot of the questions I was originally going to ask you was all about the process, but I think you really covered that really well. A couple of key questions that have come up, I just want to address immediately. Firstly, will there be a video of this available afterwards? Absolutely. CTO Craft always make videos of their talks available, so you can watch this again. The other big question, Ben, I told you this would come up, is can we get a copy of your presentation slides? Now, I know everyone wants them. I want them. They're amazing slides, but Fed, I think the best thing for everyone to do would be to contact Federico directly and set up a session with him. Fed, you just want to answer that for yourself?
Yeah, exactly. So if you want the slides, just because it's the first time that I'm doing this talk and they're work in progress and everything, reach out to me directly. I'll be more than happy to, share what I can share.
Fantastic. So look, let's get into it. Got about 25 minutes left. I guess one of the big questions that I did notice that comes up is, and it's a natural one, what are the key gotchas that you see in this process? What are the things that you've seen go wrong for companies when they're going through this DD process?
So I think there's a number of things. So the first ones are something also affected me personally as well when I was on the sales side of a previous company, which is disaster recovery, business continuity plans. Startups just don't have them. So it depends on who you are, but startups just don't have them. A lot of startups will come with, financial regulations, and so they will have them in place, but not everybody. Not everybody is fintech. So lack of business continuity, disaster recovery, which sometimes is really easy to do. Like in 2021, if you're fully in the cloud, you can easily create a backup policy and apply the backup policy. The second one that comes up, I think, is the open source issue. So companies that are importing libraries, open source libraries, those libraries have licenses that prevent them from commercial use, or there are restrictions around that, or some cases as well, the source code that has been created needs to be handed over, needs to be open source as well, which is another challenge that happens. What else? I think, the other thing that happens that I haven't covered in my slides, I think, but is the open source, the outsourcing angle. So contractors, outsourcing companies, a lot of these third parties, you will see that in some cases, if we see there's no maturity around this, a copy of the contracts that a seller has with a outsourcer, a third party, somebody else that is writing the code with them, even contractors, it will be requested, it will be reviewed. Why? Because depending on the legislation, startups are not all the times put the right clauses in place to make sure that the ownership of the source code stays with the startup itself. So you may end up being a place in which you have a third party that has created all the source code, and they own the source code, even if it has just not been enforced, even if nobody would ever think that they own the source code. It just hasn't been put down in legal terms, and it should be written down. So that's another angle that comes up a lot. What else? I think that licenses, I talked about, so making sure that you're using the right licenses. This can become a bit of a problem as well, and can become burdensome. Depending on the size of the company, small startups will say, fine, we're buying the 10 licenses that are missing. Okay, no big deal. It will appear on our numbers, but okay. Larger companies instead, and maybe have hundreds of employees, it will not be this easy. So you will see that large software companies, if you're saying, I want to buy 100 licenses because I've forgotten about them before, they will start challenging this back. And sometimes it's a matter of deploying a software on your network that scans all your infrastructure to make sure that you don't have any lost license or something that's been unlicensed. This happens a lot with databases as well, like database servers. I'll be named, but database servers that have just been running over the years, and people tend to forget about that. So you run a scan and you say, these are the number of instances of that database that we have in the estate. We have, those ones, and then we get the CLUs, we get the whatever is the type of license that you need. So those ones, I think, are the biggest ones. What else do we have? And no, I think those are the biggest ones. I think, to be honest, documentation is just another big thing.
Well, I think what you've touched on there is a really important point. Really, a lot of that comes down to governance, right? Because we often talk about governance at the company level, but there's a whole set of governance issues within technology, whether it's risk and controls, or IT security controls, whether it's risk measures, whether it's licensing agreements, whether it's open source licensing. Now, I think the open source licensing one is a really important question, really important issue, because everyone in this space, especially startups, will be using open source software. And a big question, especially for new CTOs, will always be, well, what type of license? An open source license is okay. And you see so much material about it, it can be very difficult and overwhelming. It's easier when you're being pressured by your developers to go, look, fine, just download it. Then you get a big investor come in and say, why are you using open source software? This is a problem. And you suddenly find yourself in a situation. Do you have any recommendations regarding the types of open source licenses that you should be looking at or thinking of when leveraging open source software?
Okay, so
I know this is a big question.
This is basically like the right answer. This will be ask for legal advice around this, I think. So there is a new GNU is definitely a problem. MIT license is a bit more permissive. So the problem, the angle, to be honest, for this is just to say you have a process in place where you're saying these are the licenses that we accept and we're using in our company, and this is how we can prove it. Sometimes it's really easy. I mean, there are softwares that will do it for you if you can want to buy them or use them, or it's just a matter of exporting the source code and seeing the licenses you're in use and just making sure that you create a policy where you say these are the ones that we're allowing, and we have some tickets somewhere to factor them out, the ones that we should not be using, but it's a complex issue. So there's definitely some legal advice that can be taken around that. There are firms that specialize in this. So I will say something else. So TechDD is a big beast. Very large acquisitions, what will basically happen that third party that specializes in open source licensing will be involved, will perform the scan of the source code, and then will give recommendations. So even within the realm of TechDD, you have super specialized firms that do just a very, very small thing.
Fantastic. So, and this is why if you've got any issue or questions around this, please do contact Federico afterwards, because I'm sure there's so much material he could provide you or advice he could give you that we just don't have time to cover in this meeting. One thing I want to talk about a little bit is preparing. You know, when you go through TechDD, it can feel like a very invasive process, right? Especially for a company that's not done that before, not been audited, not used to it. Enable is a little bit different because our first investor, you know, way at the beginning insisted on a full audit by KPMG. So we had to go through that process very, very early. But even then, it was still quite painful. And for someone who's inexperienced in that, there's a real fear about what should or should I not say under this process. How honest should I be? Should I be trying to cover over the cracks, right, that I believe exist? What would be your advice when it comes to that and preparing for that interview process that also happens? Because you touched on, you know, the meetings, but they do very much feel like interviews, and they can feel almost like interrogations sometimes.
Yeah, like to be honest, absolutely. So I think it will depend a lot on the type of buyer that will be there. So some buyers will be like, just be nice and just ask for questions. One point to say is that technical due diligence will typically not be the disambiguator, we should do it or not, right? So because it comes down the line, what happens is that there has been an LOI, has already been signed typically, so I won't talk about this, but LOI is letter of intent that has been signed already, form of due diligence has already taken place, a number of things have already happened in a way that the buyer is comfortable that you can get to TechDD. TechDD will likely have an impact on valuation rather than saying yes or no. Saying yes or no would mean that there's been some form of fraudulent activity or something they were just totally out of place. So you said you have an app and you actually have mockups or that kind of stuff, right? Mm-hmm. But so don't overthink about it. It's just not the end of the world, probably. That's one thing. The other thing I would say is don't lie. Don't lie. There are tellers. There will be software that is run as well, metrics that will be extracted on velocity. So I haven't covered everything, but Sometimes you ask for metrics on velocity. So if you're telling me, oh, we deploy every day, but there's not really a track of deployment. So what I would say is the important thing is just creating a narrative around this, making sure that what you're saying is said in a way for which, okay, so we are aware of this issue. We're fully aware of this. We're upfront with you. We're telling you this is the issue. This is how we're planning to solve it. Mm-hmm. And then typically what happens is a negotiation between who's paying for solving this issue. This is basically what is happening. So the issue can be solved before or after the closing, but it's going to be put on the company, on the seller or the buyer, and somebody will make a decision. For a number of things, this ends up putting on, it's part of the negotiation of the process for sure. There are some legal forms as well in terms of wrapper and warranties that can be written in the final agreement as well, but they are the last form of legal support that typically is not used. Mm-hmm. So valuation is the simplest thing to move, right? So what are we doing with what? Sometimes valuation is a very complex piece as well. I'm not going to cover it today, but you should not think it's just, oh, my company was valued 50, now it's valued 49. No, it's more complex. It's like maybe portion of the revenue that is management that will go in, portion of the management capital will be affected, a portion of the overall valuation of the company will be affected. Mm-hmm. There's a number of things in play there as well, so something to keep in mind.
Okay. I really like what you touch on around remediation plans. So, I mean, I performed DD on a company we were looking at once, I won't name the name, and they had a great product, great tech team, and I discovered they'd had a data breach. Okay, it happens. So what are you going to do about it? What have you done about it? Have you run any penetration tests? What's the remediation? And the answer was, well, you know, we think we fixed it, so we're not doing any of these things. And immediately it was just like, that's the wrong answer. So
no, of course, but I mean, I'll tell you an even creepier story if you want. So one of the most known facts about this is that Marriott Hotel chain, if I'm not mistaken, has been acquired a few years back, and a data breach had been discovered after the acquisition. So at this point, data breach has been discovered, 123 million in fines. So who's going to pay those fines? Is a significant amount, right? So this kind of stuff happens all the time, for sure. So in a case like the ones you said, I would suspect that depending on the buyer, this is why strategy is super important. What would happen is that will happen. Okay, so there is a security risk. We want a penetration testing be done before and after, and this being fully paid by the seller. So this will enter in all this process. Plus, it can be also leveraged in various ways, I guess.
Great answer. So we've got quite a few questions here, so I'm going to work through some of them. Interesting one. Would the process differ markedly during an IPO? So versus an investment, versus an acquisition, versus an IPO? Do you believe there's any big difference between tech DD in any of those stages?
So for the IPO, I don't know about the IPO because I never worked on the IPO. I suspect there will be a number of clearances that will, because you need to, after your S1 and everything, you need to satisfy some controls on this. So those controls to be listed will definitely be filled there. And the tech DD will verify that the compliance controls are in place, for sure. But I'm not super familiar with it. So is that investment or complete acquisition? Definitely a big thing. So, and this is why VCs typically make investments, right? So investment means that you're taking a minority share, typically taking a majority share of the company, and you're saying, okay, I'm comfortable with the way in which the company has been run so far. And so my risk profile naturally is higher, is smaller, because, it's just me. So I guess it depends in this case around this. The difference in technical diligence is just a strategy. If you're making a big investment because you want to because you've been promised that scalability would have been as such as, you're going to verify scalability. It's more about that type of strategy than I think more than anything. Yeah. Sorry.
Yeah, no, I guess, part of the key difference with an IPO versus investment is that you're really driving the sell side as the organization, but you're still selling through an investment thesis around the core crux of what your business does. And there's a whole paper going to be put together, pitch deck, everything, a book that's going to be put together about your business and why it can do what it's going to do. So similar to what you discussed earlier around, does this business scale? Does this business have good tech governance and the rest of it? All of those things would feature in exactly the same way. So it's just that you're talking to a different audience, I would imagine, from that process.
Yeah, for sure. The technical due diligence is driven by the strategy. of the buyer. So anything that happens around that, you want to think about why is the buyer making the investment or the purchase, and then affect Tech Lead. This is the game. The game is basically around that.
Fantastic. There's a really great question here. It's a bit long, so bear with me. But how do you find the right balance between disappearing down rabbit holes, such as extensive documentation or evidencing, versus the time demands on the team? So some things are an easy time sink, for example, evidencing open source licensing and compliance, and need to be tackled pragmatically. So how pragmatic do you get? How much do you push down the road? How much time do you put into this?
So I think it's a company strategy. I think that at some point, the CEO knows that a transaction event will happen in the next 2 years, will happen the next year. By the time in which the CEO says, this is going to be a year from now, this is when you actually start doing things for real. And I think that the fact that in a lot of the most modern startups where we have SaaS solutions, a lot of documentation just comes naturally. So it comes out of this product. You just need to be able to, raise the visibility of this documentation, and then you have it already in place. There are different activities where you have to scavenge for things, and those ones where you actually to be proactive for that, those ones when you're getting, I suspect, a year to the event, this is where you start. But there are a lot of different types of vendor or sell-side diligence you can do. So sometimes you do a quick review, which is like a week when you have an LOI in place, or you're soon to have the LOI, and you have exclusivity in place. You want to make sure that you are covering the 4 or 5 things. You want to figure out the red flags. You're saying, okay, I'm investing 1 week in sell side before everything starts, and you solve the biggest red flag. Well, you highlight the biggest red flags. Instead, when it comes down to 6 months, a year before the event, before transaction event, you say, okay, not expecting anything major, but let's just run it. So you run some external report, third party that says, this is it, and these are the recommendations. In the same way, if you don't want to engage a third party, it doesn't matter, but you want to think about the issues starting for a year and putting them in your backlog and saying, okay, we're going to get ready for it. It will help you. In most cases, companies should be data-driven anyway. So the work you're doing for due diligence is not only for per DD per se, but you're investing in best practices that will usually benefit you as well. Metrics and numbers are very important for sure as well.
Okay, amazing. So this is an important one for a lot of people, I imagine. Could you give a summary of the key phases and average timescales for whether you're a small, medium, or large organization? Is it largely the same? Do you see dramatic differences depending on the type of business that you are? How does that all start to play together?
So I have a slide that I can share, but I mean I'll just talk about it. So I think that the size of the organization, to an extent, does not matter. What matters is the investment thesis. So if the investment thesis says, I want to make an investment at risk. I want to inject money into the company because I'm VC funded, and because I'm a VC, I want to invest money into the company. In that case, the Tech Lead will be very, very fast. Most cases done remotely as well. Some data will be shared. Your senior leadership or your leadership of the engineering function will prepare some data, share that a couple of weeks after, some follow-up meetings, and you will be fine. Afterwards, there is if instead this is a big investment, if you're about to buy a company as a strategic buyer, company worth hundreds of millions, that is a very different process. Can take a bit longer, can take 4 or 5 weeks, I would argue, 4 weeks at least. Consider, though, a few things in the game. Consider that there's not a rule of thumb. What I heard the most, so I'm not sure if it's written anywhere, but is that PCP firms are willing to invest up to 10% of the transaction value in the DD process. The overall DD process, commercial, accounting, legal, and everything, that will be 10% of the transaction value, which means a lot of money in place to verify and engage with third parties, engage with specialized firms that help all this process. So it can get to a significant investment for sure. Like when this will definitely be the case in which you have that in place. There's not a hard and fast rule to say, oh, 2 weeks, 3 weeks, 4 weeks. Depends on the risk appetite, depends on the type of investment you're making.
Fantastic. And that's a really interesting metric, that 10%. I've never heard that before. So that's really useful to know. I guess so we're coming close to the end. Key question, there's another one here, and I think it kind of starts to tie things together. And please, if you have any more, do feel free to ask. Do you have any DD discovery session tips, any core tips that you'd give organizations?
Okay, so like for sell side to explore or for buy side to perform due diligence?
I think in this case, I think we focus very much on the sell side. So anything for the sell side companies. Yeah,
so there's software. Like so there is use software. Don't run away from it. So you can go online. There's specialized software that helps you checking out your licensing, buy the software. There's a specialized software that helps you checking the obsolescence of some of your libraries as well. So one of the things that we see a lot, especially in startups that are, Series F, Series G, Series H, what happens is that they have portions of their source code, which is really old, that will need to be maintained, will need to be kept up to date, and that resources will need to be allocated for this. So this is another thing that has impacted evaluation. And there's software you can just run that will tell you that library has not been updated for 2 years because it has that security vulnerability in it. So don't shy away from that. I think as well that a lot of the I've seen a number of companies that have ways of converting Slack messages into impromptu documentation. This is a good thing. So if you have emails, if you have Slack, as I said, if you have Confluence pages that are going to be documentation, it will become relevant for this. Easy to tag them, to export them and put in a Google Drive that you will share at some point, or raise the visibility of. So that's just like, there's a very easy number of things that can be done these days to benefit from all the work that has been done already. So leveraging what you have already in place and not shying away from software, which will just simplify a lot of this significantly.
So key question, if you're a company on the sell side, you've never been through this process before, you're starting to think about it, you're first, maybe second time CTO, where would you start? What would be the first thing you do? And when do you think is too early to start looking at these processes?
Well, I would say it's never too early. Definitely, if you know for a fact that you are a few years away from your next transaction event and you don't expect this to change because the company is really stable, because you have a clear roadmap in front of you, because to an extent that your CEO doesn't want to do it because it's just not interested in that at the moment. That's too early. Fair enough. What to start from? I think I would start with the easy things. I would start looking at.
Repeat that. Didn't quite catch that.
I would start with the easy things. I would start with business continuity, disaster recovery plans at a high level. They don't need to be like 50 pages with 20 diagrams tested 3 times a year. There need to be some view of what will happen if at some point the possible event in which an AWS region goes down. So all of this, semi-impossible, it has happened. So this is one thing for sure, all this documentation in place and starting with some of the software projects as well. I think it will be interesting as well for some of your engineers to say, more security minded, hey, why don't you do this? And converting that patching process, that open source scanning into a regular process that happens every so often. Or maybe even putting in the CI/CD pipelines, right? So checking security every time you're committing code.
Fantastic. And finally, do you have any kind of tech DD checklist that you could share with people? Is that something that you can do during a conversation, or do you recommend any resource for them to look for?
Yeah, so I would definitely recommend resources on this. So I don't have a checklist directly, but there is a website, which is, I think it's called technicalduediligence.com, or around that. It's a website with a book as well. They're selling a book. That book is very interesting, and it contains the actual checklist that you want. There's a number of checklists available online. The most comprehensive is the one you find on the book that I've seen so far. One thing to keep in mind, though, is don't feel scared. Because if you go online and you look for the checklist will be a million things. You're going to be like, oh my God, we're not going to do anything for the next 6 months. No. All the checklists are very heavy, but when a company acquires you, it's not like just saying, oh, we're acquiring Google. No. We're acquiring you against the others, compared to the others. Most likely, a startup that is a Series A startups will likely be in a very similar space to yours. So if you say, my business continuity plan is not perfect, but we have it down there, we have something, is already a step in the right direction for sure. Checklist, read them, go through them, get the low-hanging fruits for sure, but don't feel obliged to just comply to all the steps, because otherwise it just makes no sense. The steps cover all the investment types, and it's just not the case.
Fantastic. One last question very quickly. Would similar technical DD done during subsequent investment raise to or only at exit?
No, it will happen. It will happen again, of course. Every investor will ask you to perform due diligence. This is a process around this. Depends also how you're selling. So if a startup sells, okay, so I really believe I want to invest now, and I want to invest by leveraging an investment banker. What you're going to do is that you end up giving a vendor due diligence report that has been prepared to this third party and say, hey, part of my package, give it to all your friends and return back with a piece ready. And in this case, you can reuse some of the diligence that has been done before in the past to show this, to ascertain the status of the company. This is also very useful because, there's typically not a single seller, not a single buyer. There are multiple buyers against the same company at the same time. And this multiple buyer can be useful to have the buyer to share this piece with multiple buyers at the same time. But then each buyer will want to perform one or two levels of tech DD themselves anyway. So even if it's just perform a previous rounds, it will happen again. If it happens at A, it happens at B, it happens a different way.
Okay, totally fantastic. We're going to have to end it there. Federico, I know you have issues with your lights.
Let's not catch a light here.
It's fine, but at least we can see the background, which is beautiful. Look, it's been an amazing talk. Big thank you to Federico for talking with us today. I think this has personally been one of the most educational CTO Bytes sessions I've done. So this has been fantastic. You can connect with Federico after this event on the links that I've shared, either through his London at Contino email address or through his LinkedIn. Okay. Thank you so much for joining. Just as a last word, CTO Bytes has another event next week, helping new leaders succeed on Thursday, 2nd of December, running from 6 till 7. So please do dial in for that one. I'm sure it'll be fantastic. So thank you so much to everybody. The video will be available afterwards. It's been amazing. Fed, any last words from you?
Thank you very much for having me here. I always follow CTO Craft Bytes as myself as well. So you'll find me in the audience next time. Just one note, my email address is my name, my surname at contino.io, but it's just easier to find me on LinkedIn. So otherwise, just sending in a message to the entire London office, I would just use my email, my name or surname.
I just shared it below. So Federico at contino.io. There we go. All right. Fantastic. So look, thank you so much, everybody. I'm going to be ending the broadcast now. It's an absolute pleasure, and have a great day and enjoy your weekends.
Thank you.